Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update on this smashing Sunday. And what we're going to be doing in this one is kind of going to be a follow-up from yesterday's daily market update. Yesterday, we spent a lot of time looking at the technical reasoning to why we're bullish on specifically the cryptocurrency market. We didn't really venture outside of the crypto space in regards to looking at charts. We looked at lots of things relating to crypto that weren't just crypto currencies. We looked at things like miners. We looked at things like crypto ETPs. We'll talk a little bit about ETFs today. But we predominantly looked at our technical reasoning in regards to what way we think the markets are positioned in regards to what way they're going, okay? And we spoke about how when we look at things technically across the board, it all points in the same direction. When it walks, talks, and quacks like a duck, ladies and gentlemen, it's a duck. We also hinted to the large part of the picture also being right in regards to the macro story that sees risk assets do well, and crypto is going to be the best performing risk asset. It's going to be the best performing market, in my opinion, generally. Certainly the altcoin market in what's going to be a good time for assets as a whole. So what we're going to be doing in this video, as we covered things very technically yesterday, we'll be looking at some technical stuff, is we're going to be talking about that large part, the macro story, the driver of the macro story being central banks, of course, through currency manipulation, that they essentially dictate via interest rates. We know central banks around the world, barring the Bank of Japan, of course, are lowering their interest rates, taking strength out of their currencies, and that's ultimately going to see people, global liquidity increase. We've also got news from China. Remember, it's global liquidity. They're now sort of going ahead and buying ETFs within their regions, the actual government themselves are. We're going to really be talking about that and showing you that in regards to a number of things. So this is absolutely a video not to miss, ladies and gentlemen. We'll be covering some news in regards to ETFs, certainly the Ethereum ETF, which just passed $1 billion. It only took it 2 months to do this, and I think just last week you saw 1.1 billion in regards to Bitcoin inflows. Remember, yesterday we also looked at the small time frame, the kind of turning that we're seeing for the crypto market as Bitcoin comes out of its slumber. The altcoins find their support, ready for that acceleration. But this is predominantly going to be a video based on the macro story, and the macro story is largely driven by global liquidity, and global liquidity is predominantly driven by central banks. So this is directional alignment with global liquidity in a 12-month period. And what this is showing is a number of different assets: Bitcoin, the SPY, VX, gold, EEM, TLT, which of course is the bond market, and BND. This is from Lynn Alden. She says, I commissioned a research report written by an individual to quantify Bitcoin's correlation to measures of global money creation relative to other asset classes. And we know money creation slows down and global liquidity slows down at a time when central banks are tightening or interest rates are going up, because it becomes more expensive to borrow that money. Less people do it. How money comes into existence is it's borrowed into existence. And money is a kind of double accounting system where you have the currency, the asset, and you have the liability, which is the debt. We're going to be talking about the liability, which is the debt, in just a second in relation to BlackRock, of course, entering or potentially entering the stablecoin sector. So why are we looking at this? Well, if Bitcoin is very correlated to global liquidity, our macro picture on global liquidity is that it's going to be increasing. We know that central banks around the world are currently easing, barring the BOJ. The BOJ was a great example, or an opposing example of how central banks strengthen their currency for interest rates and what that means for assets. Remember, the Nikkei is a short yen trade. The SPY, everything is essentially a short dollar trade at this point, because if you look at assets in relation to money creation, your grandparents bought your house for a couple of grand, look at what it's worth today. This is the great game that is being thrust upon us all. And here at ALLIncrypto, we're here to help you guys hopefully break free from some of those shackles, financial shackles that are put around you for investing. Of course, on a non-advisory basis, because we're not a financial advisor. But we think global liquidity is going to be rising. Bitcoin, of course, we're showing you the correlation here based on a report that Lynn Alden did. If we look at Bitcoin in parallel with the global liquidity index, we'll probably take this off log. It probably even make it look a little bit more scarce. You can see we've got the BLX, which is the Brave New Liquid Coin Index, and we've got global liquidity. Bitcoin does well in periods of increased global liquidity, which we're very much expecting. Again, our comments on Bitcoin being going to be the best performer in what's going to be a good time for us generally. Actually, this report from Lynn Alden is backing up, because it's the most correlated to the environment that we're in. Now, BlackRock did do that report, and it was a great report, actually, talking about how Bitcoins actually could be a risk-off asset or do well in risk-off time periods. that's just going to see its promotion in regards to finding its way into people's portfolios, because the saying alpha really comes from portfolio management. You want to find assets that are uncorrelated, that will minimize your downside but maximize your upside. But we won't explain that. So global liquidity is generally very good for certainly crypto, but the space more broadly. Technically, do go and watch yesterday's video. We looked at lots of charts that give us confidence in regards to the direction we think the markets are going in. Technically, the stage is set, and this is our macro fundamental reasoning to why we think the markets are going to do well largely. And there's lots of things that support this, certainly in regards to central bank positioning and forward guidance that we got on Wednesday with their first 50 basis point rate hike. We've been looking at this for a long time. We've done lots of work on the dollar. Every Bitcoin bull market, and we'll take the draw off here, has had an element of dollar weakness, whether that was the 2021 one on the back end of all the printing, whether that was 2017 starting 2016, or whether that was 2013. And we are expecting continued dollar weakness. This is the obviously the BLX in the Japanese candlesticks, and of course the dollar. Let's actually switch over to the dollar. I will be, like I say, doing a meeting for my Patreons tonight. Guys, now is a perfect time to become a Patreon. I'll even be talking about a altcoin that I think is legitimately a 100x play from where it currently is. There's many out there. I think in the next 12 months, lives are going to get changed. And if I can help people do that, or certainly provide information that will allow them to make some sort of an informed decision, I'll try my best to do that. But we have every reason to expect the dollar to see downside continuation. This is really what is ultimately going to pump these global liquidity cycles. There's a refinancing cycle that people would say promotes global liquidity, and ultimately things are right on cue. And certainly when we look at things technically, like we did and spent a lot of time doing in yesterday's video, as it relates to the cryptocurrency market specifically, but risk markets more broadly that are correlated to global liquidity, all look great. They've all got continuation patterns setting up. We've got a lot of reason to be bullish on Bitcoin. Bitcoin's on the cusp of essentially breaking out of this pullback that it's been in since March. And your altcoin market will soar. This is going to align with Bitcoin dominance rolling. I get fought the entire way. Every time there's a pullback, which is counter trend, and we try and stay on the topic of the trend, the trolls show up. And then they'll go very quiet for a period of time until there's another pullback, and then they'll have a couple of weeks in the sun, even though they've been largely wrong on the macro picture. Guys, just stick to the plan and we shall get over the finish line. So everything in regards to the crypto space looks fantastic. Our macro picture looks pretty damn brilliant. Global net liquidity is exploding. This means unprecedented monetary destruction, economic secular stagnation, and risk asset expansion. I don't agree with all of that, by the way. This is the thing with Twitter, certainly crypto Twitter, is people just throw, certainly people from the financial sector, just throw the biggest load of nonsense in regards to, I'm not saying this individual, but they use complex terminology deliberately because they probably don't even know what they're talking about themselves. But largely this is right in regards to monetary destruction, weakening the dollar, which is what we just spoke about, which is going to see risk do well, economic secular stagnation. Yeah, I would say you get economic growth during whether it's real or not, monetary destruction, or certainly monetary easing, and risk asset expansion, which, again, going back to our point at the start of the video, we just looked at it quite a lot of detail. Of course, again, this is Bitcoin and global liquidity. We've already shown you that in our own sort of chart. And talking about global liquidity, we spoke a lot about China and what they've recently been doing. Remember, it's global liquidity. We did look at the Chinese stock market a while ago now and say, look, this looks bottomy. Bullish divergence is showing up in line with global liquidity and things generally. So when we dissect each piece of this puzzle, and again, we've covered the large part today in regards to what's gonna see, why are things technically setting up in the manner that they are, is because of this. And the markets know that, and we get our clues in regards to what's going to happen based on the markets and how they look. And the stage is undeniably set. And there is that great pushback there, and I think it is a great pushback, that is it too obvious? Perhaps. But I don't think it's that obvious to many people. We consistently get fought, and I'd say poorly fought, by the way. If it was a boxing match or something, the majority of people would lose, unfortunately. In the sense that the arguments people put forward for being bearish just don't overwhelm the arguments for the reasons to be bullish on the markets, and certainly the cryptocurrency markets. You know, people often forget there is literally a technological revolution going on here with distributed ledgers. A little bit of news that's kind of relevant. iShares Ethereum ETF eclipses 1 billion in assets. Now in the top 20 of all 3,700 plus ETFs. Did this in 2 months. Impressive. This is just iShares. There's more money in them generally. And also US Bitcoin ETFs ranked 1.1 billion this week, most since mid-July. You know, the tables really are turning. Let's talk about the week ahead, because it's going to be a significant week with obviously US non-farm payrolls. We want to see this data improving and not sort of fall off the deep end. You know, that is one argument the bears could potentially give. However, I would argue unemployment data is very skewed based on the locking down of countries, which it always amazes me. People just seem to forget that. I'm just going to take a quick sip of coffee here, guys. People will often look at historic indicators and forget the elephant in the room, which is the shutting down and locking down of economies. And for what reason? You know, there's so much stuff coming out in regards to the event that shall not be named. And if you haven't woken up yet, I don't know what to say. You know, Joe Rogan said it in his new special brilliantly. We lost a lot of people during COVID, and many of them are still alive, you know. Anyway, there we go. Just mentioned the name. The last thing I want to talk to you guys about is the 16 trillion by 2030. BlackRock is quietly backing a radical new US dollar rival amid a Bitcoin and crypto price boom. This is from Forbes Digital Assets. I was going to go through this, but because we've spent a lot of time talking about the big picture and why it aligns with technically everything that we're looking at, I just want to sort of skim over it. So BlackRock have introduced their build funds, which, you know, they partner with Securitize to do so. I think it's got something like 550. See if I can find the metrics here. We've got something like 522 million in assets on their build. And they're essentially looking, you know, it's the largest tokenized treasury fund that there is. Crypto is going to play a role in monetizing the world. And Larry Fink has already previously said that tokenization is a future of sort of investing and you know, asset management. And they very much seem to be in it. They're also, or Ethena or whatever it's called. I know Arthur Hayes backs them. He essentially are looking to back their stablecoin with this. Securities are going to be tokenized, and stablecoins are going to play a role in regards to sort of servicing and potentially staving off a US debt crisis, at least for a period of time. I was previously of the thinking, and we can do longer videos on this where we just give our thoughts. I was of the thinking that there would be a possibility, albeit perhaps a tall order, that crypto might replace currencies. Certain cryptos that we have today might actually replace currencies. I'm now of the thinking that the currencies that we have today will just exist in another form and be propagated by the same individuals, and they're not going to give up that power. Somebody who I'd love to interview on all this is Whitney Webb. I think she's got some great takes that I very much align with, but we're rambling on now, guys. Stick to the plan. The macro picture is set. Technically, when we look at things, there's confluence in multiple areas. It's just a case of being in it to win it at this point. So I'm going to leave you to your smashing Sundays, ladies and gentlemen. Enjoy your roasts, and I'll see you all in the next one. Thanks for watching, guys. See you in the next.